Well, we start with a warning over the state of the global economy in the wake of President Trump's tariff trade war. As investors and businesses around the world struggle to keep on top of the latest developments of Donald Trump's trade policy, one influential organisation has unequivocally said that tariffs will be bad for global economic growth and living standards. The leading economic think tank, the OECD, has cut its forecasts, saying the global economy will only grow by 3.1% this year. The biggest changes will be felt in the United States' neighbours, with Mexico's economy set to shrink by 1.3% this year, which compares to growth of 1.2% in the previous forecast made in December. And Canada will still grow, but only by 0.7%, rather than the 2% that was previously predicted. This is all based on the assumption that President Trump goes ahead with tariffs of 25% on all goods from both neighbours at the start of April. Meanwhile, the US has also been downgraded to growth of 2.2% this year and 1.6% in 2026. Well, today, Canada's new Prime Minister, Mark Carney, has called for economic collaboration rather than confrontation on his first overseas trip since taking office last week. During a press conference with the French President, Emmanuel Macron, Mark Carney said that Canada must reinforce ties with reliable allies in the face of economic turmoil.
I want to ensure that France and the whole of Europe works enthusiastically with Canada, the most European of non-European countries, determined like you to maintain the most positive possible relations with the United States. Canada is a reliable, trustworthy and strong partner of France, which shares our values and lives them through action during this age of economic and geopolitical crises.
Well, in the US itself, fears over a possible recession continue, not helped by the latest retail data, which shows sales rising at just 0.2% last month, which is less than expected, suggesting the economy is growing at a rather moderate pace. This all coming ahead of the latest Federal Reserve meeting on Wednesday. Let's head over to New York now and speak to our North America business correspondent, Michelle Fleury. And Michelle, are people drawing a link between this weak retail sales growth and Donald Trump's policies?
Tag, I think economists are looking at the data and they're asking themselves the question, is this as a result of these policy shocks that we're seeing at the moment? Or is it a trend that was kind of already in train before we started to get these mass layoffs at the federal level and also the escalating trade wars? And I think the conclusion is it's a little mix of both, because if you take today's retail sales figures, there was a sharp drop in January. That was really before we saw kind of some of these policies at the federal level go into effect. But then if you take what's happened in February, the lack of a strong kind of reversal or a rebound suggests that that's where you get the uncertainty of policy starting to kind of affect what consumers are doing. You saw a sort of slightly cautious approach, particularly when it came to dining out and going to bars.
Indeed. And of course, most economists will tell you that tariffs are a lose-lose for both sides. Donald Trump himself has even acknowledged they could be economically damaging. I suppose the open question is how much damage he thinks they're actually worth.
Yeah, I mean, you've heard Donald Trump and some of his cabinet members say, that the prize at the end will be worth it. There are various economists sort of stepping out there and saying they question that kind of wisdom. And there are people saying, actually, when you get trade wars, the kind of damage that's done maybe will not be offset by sort of some of the deregulation or tax cuts that the Trump administration is promising further down the road. What's been interesting is obviously we've seen a lot of volatility on financial markets. And there was some question as to whether the markets could perhaps rein in the president when it comes to his kind of escalating trade war. Now, a short time ago, I spoke to Desmond Lashman. He's a senior fellow at the American Enterprise Institute. He's also a former deputy director at the IMF, the International Monetary Fund. And he said he believes the US markets could force Trump to change course on tariffs.
Well, we've already had very large losses. We've had something like 10% of the value of the stock market wiped out in a matter of 3 weeks, which is a very rapid move. something like $5 trillion of wealth has evaporated. My expectation is if the stock market falls another 10% or so, Trump will have no alternative but to make a U-turn, because there'll be a lot of pain from the stock market losses, and that in fact can feed into the economy. We're already seeing consumer confidence very weak. If you have a 20% decline in the stock market, consumers are going to pull back, the economy is going to slow down, Trump's polls are going to sag. He'll have no alternative but to make a U-turn on his policies.
So there you have that bet. He thinks that the markets could force Trump back to the negotiating table sooner rather than later. Whether or not that happens, the Federal Reserve still has a big challenge ahead of it. Tag, they meet this Wednesday to set interest rates. Nobody expects a change in the level, but they are dealing with the tricky challenge, and that is worrying about inflation on the one hand, but also a potential slowdown on the other.
Indeed, we await the outcome of their latest meeting happening on Wednesday. Michelle Fleury in New York, thank you very much.